Hi, this is PR Sundar and welcome to this special episode where I am going to talk about value stocks. The stocks can be broadly classified into two parts. One is growth stocks, one is value stock. So what is a growth stock and what is a value stock? A company has lot of expansion, so they always need more money. Although they make profit, that profit they need to expand the business. Normally these people, they don't give very good dividend to the shareholders. Whatever profit they make, only a small portion they will give it to the dividend as a to the shareholders. The rest of the money they'll be using to expand the business. So they will keep on expanding. So the share price may continue to go higher as they expand. But there are some other stocks which are called value stocks. Let us say a company has no more further scope for expansion. What they will do? Whatever money they are making, what are they going to do with the profit? They just distribute it to the shareholders. So because of that, the share, the dividend yield will be very, very high. The share prices will be low. Second thing, many people do not want to buy these value stocks because, the growth for the company is not very, very high. But however, some smart people who are looking for relatively less risky investments, they can always look at the value stocks. So first let us go to Investopedia and see what is value stock. A value stock refers to shares of a company that appears to trade at a lower price relative to its fundamentals, such as dividends, earnings or sales, making it appealing to value investors. A value stock is generally contrasted with a growth stock. This is just opposite. Key points: a value stock is trading at levels that are perceived to be below its fundamentals. Common characteristics of value stocks include high dividend yield, low price to book value, low PE ratio. A value stock typically has a bargain price as investors see company as unfavorable in the marketplace. But sometimes I can tell you, these value stocks can also give a very good appreciation. In fact, honestly, I tell you my story. So about 7-8 years before, I was appearing in a local television channel as a stock market expert. And people over the phone, they will call us. They say, sir, you give some stock recommendation. I was also not new. I'm not really an expert, though I was an expert on a television channel. So I was thinking, okay, and the people are asking, what stock to recommend. And if you recommend a stock and if the price goes down by 30-40%, people will not be happy. I was looking for some stock. It may not give very high capital appreciation, but the downside should be less, limited, so that, the people cannot digest the huge loss. So that is the time I was reading through the books to find out about these value stocks. Some of the stocks which I recommended in 2014, I can tell you, there is a company called Balmer and Lari, a Rane Group in Chennai based company, Rane Holdings, Rane Madras, Rane Engine Valves, Rane Engines, it's a group. And then Tata Investment Corporation. So these are some of the stocks I recommended. And in few years time, so they all became multi-bagger, and Balmer Lari did not appreciate much, but Rane Group and Tata Investment Corporation shot up 3 times, 4 times, 5 times, but still they offer very, very good dividend yield. What happened in the last 1 year, if you go through my YouTube video, I have recommended ITC when it was around 200 rupees, now it's 300 plus, so 50% appreciation. Plus they give 5-6% dividend yield. And then I recommended REC, I recommended PFC, they both give a dividend yield of 10%. A 10% dividend yield is much higher than a bank FD rate. And then the most surprising recommendation which I came, just 2 weeks before, I came out with a recommendation, Tata Investment Corporation. In fact, 2014 also I recommended that. And 2022 I recommended. Even I did not think how much this price will go up. Let me show you the chart. This is the Tata Investment Corporation. Just it is 2 weeks. I recommended somewhere around here, around 1550, 1600. From 1600 to 2700, all in a matter of 10 days. In fact, Tata Investment Corporation is a holding company of the Tata companies. I don't think that any other Tata company shares appreciated so much, but I really don't know how come this has shot up so much. If anybody would have bought based on my recommendation, would be sitting with a very, very huge return of about 40%, 50% in a matter of 10-12 days. But of course, don't expect all my recommendations to go this way, and some of my recommendations can go wrong also. Then look at REC. In fact, when it was around here, I bought the shares and I announced it in my Twitter also. When it was around 110, I bought it. I think it was 110 was somewhere here. I bought around 110, then it went up to 140. Then they have given 1:3 bonus. Now again it is trading around 105 to 110, but in the last 2 to 3 months, I've got 5 rupees dividend, 4 rupees 80 paise dividend was given. That already about 5% return for me. Plus 1:3, for every 3 shares I had, 1 share bonus share I got. So that is already giving price, again it has come back to the same level. So I'm already sitting with about 35-40% return in just a matter of 2 to 3 months. If you are a beginner to the stock market and you don't want to take high risk, then you can invest in value stocks. But again, even the value stocks may not have value. Tata Investment Corporation at 1,500, 600, it has much value than 2,600 and 2,700. As and when the overall market sentiment is bad, when the markets are falling, you can just buy some shares. And I will tell you how some HNI people make money. Say for example, I'll take my own example. What I did when REC was around 110, I bought. Right now, after the bonus I'm talking, before the bonus I think the lot size was 6,000. Now in futures and options the lot size is 8,000. I buy the share for 110, I already got 5% dividend, and before the end of this financial year they will declare another 5%. So 10% dividend. That is one side. Another side, if the markets are good, you can expect at least 10% capital appreciation in 1 year. I have already got 30-40%. The next 2 to 3 year target is already done in 2 to 3 months. But at least if the markets are good, you can expect about 10% return. So you get 10% capital appreciation, about 10% dividend yield. Of course, the capital appreciation is not a guaranteed one, but I'm just taking an average figure. And then what people do, HNI clients mostly, they after buying the shares in the cash market, so they sell a call option. So at a fair distance. So what happens, as long as the price does not go above that, so that call option money will be free for you. But if it goes, you should know how to manage, or you must be prepared to give delivery. People make some money through this covered call. So this strategy of having the shares in the demat account and selling a call option is called covered call. So it's a very, very famous strategy. You go to YouTube, just type covered call, you will get hundreds of videos. Through the covered call, people can hope to gain about 10% return per annum. If you are buying a value stock, by nature it's a high dividend yield. So the probability of price going down is very, very low. See, if a share at 110 rupees, if the dividend yield is 10-11%, if the price falls to 50 rupees, then the dividend yield will be 20-25%. When a stock is available for 20-25% return, everybody will invest, right? So that's why this price will never fall 50%. People invest in value stock, and so that they are, the downside risk is very, very limited. We're conservative investors. They don't want to make a huge profit, but they don't want to lose more money. So they go for this. Invest in a value stock, expect about 10% return in capital appreciation, 10% return through dividend, and 10% return through the covered call. So that means you get about 30% return per annum. A 30% per annum with a low risk strategy is something really, really very, very good. Many conservative people, and they do this. And of course, doing a covered call, it has got its own plus point, minus points, and you must understand what is it and how does it work and everything. And also not everybody can do, because right now REC, if you have 8,000 shares in your demat account, then only you can sell one call option, because one call option, the lot size is 8,000. 8,000 shares at around 110 rupees, that costs about 8 lakh rupees. So I don't think that many small investors will have this kind of capital. So that's why I said, mostly HNI people, they do this. Just to summarize, if you are a conservative investor, look for value stocks and your downside risk will be limited. If the markets are good, you will get both capital appreciation as well as high dividend. And in case if you are interested in making some extra money, you can always learn how to do through covered call. From time to time, I will be introducing more value stocks to you. In the last 1 year, as I told you, I introduced to you ITC, REC, PFC. It's not a value stock, but I still invested in Vedanta and Tata Steel also. So I'm sitting with a good, because both are high dividend yield stocks, but they are not value stocks. So high dividend yield, because they are cyclical stocks, the price tend to go very high and very low. The price tend to move in a very, very wider range. I will be coming out with more videos in future. So hope you enjoyed watching this video. Thank you for watching.